Hello guys, and welcome to another Elliott Waves on Cryptos video. It's been nearly 10 days since the last week's videos, and markets have moved, of course. Certain things have changed. Some of the scenarios and the variations that we've been looking are a bit more favorable than others nowadays, and MATIC is back. We haven't looked at it for a while, and the Core Iron Cycle team has finally actually voted for it. Given, of course, the upside that we've seen over the past few weeks, that makes a bit more sense. Before we go to the charts, let's not forget that none of this should be considered as investment advice. It's educational to help you understand how Elliott Wave analysis can help you make informed decisions, as it helps me. And let's not forget, guys, as well, if you want to make any comments, if you have an alternative in mind or a variation, you are free to comment on YouTube section, but it would be much better if you joined the free Discord community and leave your comments there. I'll try to be as responsive as I can in the free version versus the paid, of course. So yeah, let's jump to the charts, check BTC first and then MATIC. So just really quickly to start with BTC, guys. And if you remember, I personally talked about this particular variation for a few weeks now. And I said that if certain things happen, then I will probably change to this. We have finished up here Super Cycle Wave 3, and we're going down Super Cycle Wave 2. In my opinion, it's going to be an A, B, and a C. Okay, although I know we do get close, very close to a low, but it's how that should be read. I will explain why. Because, guys, if we look at the wave 1 and 2 here, which can be an A and a B as well, if you might, you might have the idea. Look, we'll come down to 138.2, which is an extended wave 3, but this is not what is most important. Most important is that we break outside the base channel, which we didn't manage to do in here. Okay, and here that is again a third wave because we have increased volumes. However, it's probably of an internal structure. Now, the reason I changed this to the previous main I had, and we had this something like A, B, and C, right? And we'll supposedly get something like 1, 2, 3, and 4, and then we'll get 5 in here, which means 1, 2, 3, 4, and 5. The reason is that this structure over here, guys, is taking a bit too long to fit the structure in the supposed wave 2 here, right? Or even if it were here. So due to this sort of mismatch, should I say, between the two corrections, we've got to make that change for now until we see something different. Okay, so we've got to always go with the structures that make sense to be in the same degree based on different guidelines. Okay, but structure has always priority. So this is the one, and that assumes, of course, that we can still go down to 1481 to finish wave 3, right? But if we look at 1, 2, if we count in here, we do have 5 waves, right? So 138.2 is fine. We expect wave 4 to finish, yeah. So something like a WX and Y here. We're gonna see the short term wave 5, okay, and that might come down here, for example, or maybe lower, who knows. Then wave B, and then a wave C. Now, the only thing I don't like about this structure, guys, is that if we just make an assumption now that we're going to end around 1481, yeah, and we make another assumption, 1481, yeah, we make another assumption that we're going to do a correction up to 26K, let's just say to 52, right, and then we fall from there. Then that brings us the 100% will be down around the 6K, 7K. It's a big drop. It's a very big drop, and I don't think I expect prices to get there ever again. Okay, this is the thing I don't like. But of course, this is based on assumptions, guys. Okay, we've got to remember that. Now, my idea is this. Either way, yeah, and from there up, which means, well, Q1 next year will be the bottom or something like this. Now, the other things we've been looking, let me just quickly go and find them for you. This is one of the variations, okay? And this is actually the one we were looking last time. We were looking for, no, it's not actually. This is the one where this is 1, 2, 3, 4, and 5. We have, we are taking wave 3 here as the one with the highest volumes rather than the one that broke the base channel. You could do both, but to me, it's more important to look at the base channel for a potential wave 3 in this particular case, especially since we are breaking outside the channel in the next move to the downside, okay, which is very important to remember. If we hadn't broken outside and we stopped here, that would be fine for me, but breaking outside, then, you know, it suggests that, you know, the third is like here. That's why this is a variation and not the main. What would this see is this as 1 and 2, and then that would actually increase up to 3, 4, and 5. We will get wave A, then something like a B and something like a C, and from there fall down. This is pretty much very similar to the scenario, the main scenario we just looked. It's just that in the previous scenario, I expect one more low, okay? In this particular case, the low is in. And we're gonna see A, B, and C, and then fall. The other variation is here, which is the main that we had before, okay? A, B, and 1, 2, 3, 4, and 5. And what I did say last week is that these two corrections getting a bit unsynced. Now that correction has gotten quite unsynced, and that's why I've changed my main. Now, note you though, okay, maybe in the short term, that indeed finished here. If it finished here and will go down, then we actually just gonna move this here and make this our main again, okay? Because it would still be possible given the time, the duration of these two corrections. But for now, because it looks like one more high is coming in the short term, this is a variation. One of the alternatives we'll be looking, actually something that it was our main for a very long time, for months I would say, it's that this is going to be a wave 4, an A, B, and a C again, and that could be finished here, or maybe we're going to get one more to finish and then we'll go up. We're not going to know in several months if this is the case, but due to the depth of the correction, and because it's also wave 4, then this is not much likely, because this really extends too much. The longevity of this correction, it gets to levels where it got unsynced a few weeks back. That's why we changed it as well. Now, I've also looked at this particular W, X, and Y, maybe finished or maybe not, who knows, where this is going to be wave 1 and 2, and we're going to continue up for 3, 4, and 5 in the cycle degree of the super cycle degree 3. Again, not as much likely. And the diagonal combo, which means we need to overlap and then do one more down. We need to overlap with the 24K over here, but just off. Otherwise, wave 4 is going to be larger than wave 2, which will invalidate this. And that would be pretty much be for the long-term guys. Now, if we go down in the short term here and back to our main scenario, yeah, look at this. Let's go down in the 1 hour. So this is what I'm expecting. Yeah, a W, X, and Y in cycle wave 4. Now there is different ways one can see this, but I am currently seeing this with the latest changes I did as an ABC for a W. This is an A B, and a C, which is a running flat in wave X. And I'm expecting a simple zigzag. It might be something else though, as an ABC here in wave 4. And once we get pretty much above the previous high at 2240, then the high could potentially be in. Now we might extend to the channel top and fall. And if we combine this, of course, some of the levels that we should be really looking for here for WX and Y measured move, for example, is at 2350, right? Very good level. Another idea is to check the A and B in wave Y. The equality of waves A and C here come around 23K. So this 23K, 2250 is a very, very important level. Then above that, we need to consider the Fibonacci retracements that come off the top Okay, and if I'm not mistaken, it's one at 23 and then higher. So what we're expecting pretty much now, guys, is a wave Y. Okay, supposedly, okay, this is a leading diagonal, so supposedly we are expected to go beyond the measure move 100%, a bit higher, right? So we can see higher than 25, 26, 27. But we prefer to stay above 2050. That's one thing to remember. Second thing, I'm assuming here flat with an extended C wave and 3, 4, and 5, but this still might be a wave B. Okay, we have ended a potential leading diagonal here, but one might say, what about this being 1, 2, 3, 4, and 5 here, and this is where we ended? Well, yes, it's possible. To me, it doesn't look as much because of the internal structures of this particular wave, but it's still possible that we might still be, our wave A might be here. So that might actually correct quite a bit. And as you well know, usually corrections of ending diagonals or leading diagonals go down to 61 to 79%, most often the 79%. So we could expect prices to go back below 20 and still move up. Okay, so just to repeat, A, B might have finished, we'll go up for C, or A, we're going to get B and then C, or A, back to the previous. This is going to be something like perhaps a triangle, who knows, that will go up, or it might be a flat or a WX and Y, because this is a wave B. It could be a wave B, right? But with the current structure and these volumes coming in here, this is considered a correction for now. Okay, this structure is considered correction. That's why I have this as a wave 2. Now, we talked about some of the levels. What else is important to do, guys, is look at the 62 and the 79 here and the 50, right? Now, if we manage to stay above the 50, that is adding bias to the upside. But if we lose 50, then that is going to add bias to the downside, which means we might even have finished up there. And I will show you now the variations so that there is no questions about that. So the variations, guys, are just the main idea still in wave 4, but different sort of structure. So one of them is the W, the X, and we're going to get something like an A, B, C, D, and E for Y, and then fall. That subsequently means there's not going to be a new local high above 2250, and we're going to get a triangle. If we do move above the 79%, we'll go up to 90 or even higher, we are going to change this triangle to a potential flat in wave Y, okay? Because usually flat wave A does correct nearly 100% of its preceding wave, okay? So W, X, and Y, the white one with a triangle or a flat, okay? And of course, the other scenario would be to have an ABC as well, right? Which is pretty much our main. The other one would be for this to be W and X over here as an expanded flat here, and that would be like a flat, which means we finished here. This is the red one, and we're gonna start moving lower now, okay? And we ended here in a running flat wave because we did the truncation, the 70% truncation, so we don't care pretty much where it goes to the downside, and that's the end of it, right? And the other case we can still look, of course, here is you know, a potential like that would be something like a leading diagonal, ending diagonal, and the correction. And then we'll see something like an ending diagonal. So leading plus ending diagonal connection, which is very rare to see. So that's why it's not much possible, or included actually, I would say not possible in our analysis. But maybe at some point we're gonna have to make a few changes on that. Okay, so that's all for BTC, guys. And of course, if you have any questions, you know, feel free to ask. Let's leave this on here just to remember. And MATIC. MATIC, let's go out on daily. And I want to show you something here, guys. We have finished cycle wave 1, and we're doing a correction down in cycle wave 2. Okay, as you can see, again, the same idea as always before. Yeah, 1, 2, 3 is the one that breaks outside the base channel. 4th never gotten back in, and the 5th. This is an A, B, and a C for me. Okay, and there is potential to go up to around 90 or so, perhaps even higher, who knows? And from there, go down in wave C. Okay, now looking at this and assuming that this is a wave B, and then Bitcoin is not even there yet, you might say, is MATIC leading Bitcoin? No, MATIC is not leading Bitcoin, but MATIC might be leading a downside. Okay, so because it's going to have more potential for downside than BTC as any other altcoin. Okay, that's the reality in these markets that we are trading. So with that said, guys, look at this. So if we are supposedly done with a correction, yeah, and we have just come all the way up to 38% now, theoretically we might just say we are done, dude, and we can just short it. But I will tell you, no, that's not true, because wave A and B here, yeah, brings us up to around the 85 for the measured move, and we'll have to respect the guidelines in order to make more educated decisions, more insightful trades as well, if you may. So 84 for me is at least the level that we can go. Now, thing is though, if we're going to break the 38, the next level up in terms of Fibonacci is the 97. So 84 to 97, you might say, well, this is our range, right? And I could say, yes, this is potentially a very good top. And if we take into consideration the fact that around the 90 cents is where we can meet the top of the channel, then there is increased chances that we're going to see a dynamic level playing out rather than a Fibonacci level, if that makes sense. Okay, now on a different note, let's not forget, if this is A and B, we're gonna draw this channel as well, which is looks quite trending, no, doesn't it? Let me just go here on the 4 hours weekly. Okay, and look, internally it looks like we've had wave 1 and 2 here, and that we're going on the 3rd, because it's increased volumes as well. Now, well, it depends on how you see that, but someone could just say that, well, this is 3, 4, and 5, and we're finished. And you might be right, it might be the end of it, but I don't think so, because we haven't even got it up to 84. So what I'm thinking is happening is this is 1 and 2, this is 3 and 4, and we're going to get another wave up to around 84, perhaps higher, who knows. And if coincidentally we're going to stop around this median line of this ascending channel, or perhaps even, who knows, maybe we're going to get something like this and we stop in this cluster, yeah, that then will look like a much better move to the downside, especially if we get some sort of divergence in any of the indicators. So the top of this channel, of course, and the median line of the ascending channel are something that we'll have to follow closely. Now, what else we'll have to follow closely in case we do break above that, guys, levels is 128. Okay, I would even say lower than that, 124, because this is a wave 1. Okay, usually, this is like the last resort of the previous impulse, to keep assuming some sort of progression to the downside. So breaking 124 or so, it's going to be a big level. Okay, and it comes to around the 161 extension as well. So if that happened, then we will have to go and call this 1, 2, 3, 4, and 5 probably. Yeah, and then we're going to get a correction and move higher up, which means 1 second, which means we'll probably come to the alternative. Okay, what does the alternative indicate? The alternative, guys, is still the same case that we're expecting the wave 2 to finish. However, instead of 1, 2, 3, 4, and 5, an A and a B and a C, we have finished. And this is A, B, and we'll have an extended wave C. Okay, now as you well know, though, as well as me, the guidelines say that we'll have an extension to the 100% if an ABC, and especially not down to 200. However, in cryptos, it's very well expected, because cryptos decline a lot. They lose a lot of their value. Okay, so it was at $3, for example, and it went down to 30 cents. That's like a very big drop. Okay, so given the 90% loss of its value, obviously you can understand that with wave A being at 125, you know, I mean, you're gonna have a lot of that wave C being extended, right? And there's no other way to label it. Now, what we are doing in this particular case is that we say that the end is here, okay, and that's going to be 1, 2. We're going to get something like 3, 4, and 5. But again, we need to cross above 125 to start considering this more seriously. If we don't cross above 125, guys, that will probably be a case that this is going to be a wave X, and then we're going to get a wave Y, okay, or we're going to go to the ABC that we're looking earlier in the main, right? But I would still prefer to see this as a WX and Y, even if we cross above 125 and go to 183. But obviously, this is very premature to assume for now. It's just very hard to me to see any of the altcoins putting a low in for fresh highs. Okay, it will all depend on the economic situation and other things. Of course, there's a lot of components that we need to weigh in. But for now, the two things we need to remember is that the low is in and will go up. We need to take into account as not taking, just consider 125 as our max level for now, okay? And if we get there, we're gonna see in the next sort of analysis where we can expect to go there and what changes. Until then, though, there is no reason to make any any more sort of assumptions, okay? Back to the main now. If you look at the 1 hour, we talked about this, right? Apart from the 85, okay, we need to also, because this is the assumption that this is an A, B, and a C measured move, we need to also take into account where is this wave 3 going up to. And I want you to see how $1 comes on our spotlight here, on the spotlight, okay? Look at this. This is the 161 extension of this wave 3. And supposedly this is going to be 1, 2, 3, 4, and 5. Wave 3 is going to extend, right? And then we'll get the 4 down to around 84 or something, and then we'll get a 5 around 110. Okay, but if we're going to get 110 in this manner, then we're going to be above the median line, or if we're going to be above that, it can be considered as bullish. But if we come up in a way where, we somehow stop at the median line here and then fall back within this base channel, then we'll consider it as more bearish. So I want you to draw these two channels as I draw them, okay? One is the acceleration channel and one is the base channel. Actually, no, both base channels. Look at this. You connect 0 to 2 and you drag it down to 1. That gives you the base channel here. And then 0 to B and you connect to A, okay? And you get these two channels. Draw them, use one of your charts, and see how nicely they work for you as well. So guys, I don't think there's anything more to add here. Maybe perhaps we can just draw a Fibo down and check again if there is any confluence on the AP and on the 1, 2. So the 62, first of all, 128 is a very big level here. 62 and 168, this is the golden cluster, guys. This is how I like to call it, because you get the 1618 and the 61.8. The retracement and the extension. These both are golden numbers, okay? Because I see that most of the people know about the 61.8 only. No, the 1.618 is also a golden number. And then you got the 1.10, which is very important as well, right? And above that, well, it's pretty much around 182, okay? So that's all from me for this weekend, for this week's Elliott Waves on Cryptos video. Thank you very much for watching. As always, you can find information in the caption if you want to join my Discord channel, and so so you can get a bit more insights into the on a bit more regular updates, I would say, and more insightful analysis. Because this is as detailed as it gets, but only for BTC and MATIC. There's multiple assets that we analyze on a daily basis, and it's a shame that we don't know which direction they go. So thanks for watching, and we will speak again in a week's time or so.